It's about that time of day again. My name is Joseph. It's already Wednesday evening, March 15th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish and trying to reach the inventory target at 49.34 tomorrow. But we have two important clues telling us this market is likely overextended and to wait for a trap low for the best buying opportunities on Thursday. The S&P is bullish and trying to retest today's high, but the no trade zone is just a few points overhead, so we have a specific plan of attack to avoid getting caught buying high tomorrow. Gold is bullish and hunting for a target up at 1228.4, but two levels of resistance in the chart are telling us the most reliable buying opportunities will likely be after a short-term pullback. The euro is bullish and hunting for the news target waiting overhead, but we have two big important clues, two levels of resistance telling us to resist the temptation to chase this move and look for a pullback. The FDAX is bullish, but trading at the high of a channel tells us to be patient and buy the dip on the way up to the double up target at 89.5 tomorrow. Well, oh well, we survived the FOMC announcement, and 25 basis points later, I still have all 10 fingers and toes. I'm still kicking. We survived it, right? We have some incredible moves to work with tomorrow, some major targets within reach, and as always, I got a great plan of attack for Thursday's session. Before we jump in, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog here at Sideways Markets. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. It's only a small snippet of the video on the YouTube channel. Follow that link in the description and come out and join me on the blog at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this video is ready to be watched. Join me on social media throughout the day. I'm always posting important links and updates throughout the day on social media. Download those charts. Below the video tonight, you can download all the charts you see me using in tonight's video and have them ready on your computer for tomorrow. And please don't forget, make sure you grab your free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee that. Grab that free pass in the upper right-hand corner if you are not an advanced member here at School of Trade. And, of course, don't forget, if you're brand new here to the SOT community, make sure you stop by the frequently asked questions page so you can learn the who, what, where, when, and why. Boy, oh boy, what a great third week of the month of March we've had. We've been talking about this here all week. It's quadruple witching. Tomorrow we go into the Thursday and Friday of quad witching. We do typically see increased volatility and decreased volume on the Thursday and Friday leading into quadruple witching. So we'll keep an eye on that tomorrow. Looking at this now, going into Thursday's session, there's no major news on the calendar for tonight. We go right into tomorrow morning. Of course, Thursday, March 16th, right? Everything's pretty much lined up there about 8:30 a.m. Eastern time. We're going to hear from the BOE tomorrow at 8 o'clock. And then, of course, we get a nice peppering here of news at 8:30. Housing starts, the old yawner jobless claims, and of course, don't forget the Philly Fed. You can't forget about that Philly Fed tomorrow at 8:30 a.m. So we got a bunch of news there, a little bit of a sleeper there from the jobless claims, the housing starts, and the Philly Fed should be able to move the needle here for us tomorrow morning as we finish up London and go into the U.S. morning session. We get the JOLTS report tomorrow at 10 a.m. I'm not going to expect that to move the needle very much tomorrow. I would expect tomorrow to be really all about reacting to this 25 basis point hike that we heard from Janet Yellen and co. at the Fed tonight, right? Don't forget, tomorrow oftentimes considered Reaction Thursday, right? The day after the Fed comes out and announces, today of course, right, they announced the interest rates are increasing by 0.25%. As you can see though, no major news tonight, major news tomorrow morning, 8:30 a.m. Be aware, right, we might start seeing volume drop a little bit tomorrow late morning into the afternoon. I would expect tomorrow morning, though, to be a pretty active session for you guys. No matter whether or not we have quad witching, right? We just got a 25 basis point cut there or hike. And so I'm definitely expecting there to be quite a bit of backlash or reaction to that in tomorrow's session. So keep an eye on it. How about some crude? We'll go crude, S&P, gold, euro, and we'll wrap it up here tonight on the FDAX. I know you guys are busy people like I am, so I appreciate you guys sticking around and following along with me tonight. Crude is bullish and hunting for the inventory news double up target at 49.34 this evening. We look overextended right now. I don't like to use the word overbought because I don't have the right to determine that. But we do look a bit overextended. We're at the high of the channel and we're trying to break out of the range we started with today. Now, did you watch last night's newsletter? Please tell me you watched last night's newsletter, because if you did, you were readily able to participate on this move today. You pretty much were prepared for everything across all 5 of these markets if you watched last night's newsletter with what I talked about early in the video last night. If you didn't watch the newsletter last night, make sure you go back and watch it, because we talked about, right, those 4, almost 5 ways to trade those strong breakout markets, right? So make sure you go back and watch that if you didn't, as some homework tonight. As we talked about last night on the newsletter, the day started today with a spike in range, right? We didn't know what we were going to get, but we knew we had 1 of 4 scenarios, and of course it was pretty easy, right? Once we saw this lower high, right? Once you saw that lower high today, you knew it was not going to be a spike in channel. It wasn't a spike in wedge, right? Again, if you missed last night's newsletter, go back, and that should tell you right there, right? If you don't know what I'm talking about by saying that lower high, you got to go back and watch last night's newsletter and see if you can anticipate what I said last night, right, and then translate what I'm talking about right now. You should be able to, right? I'm not going to give it away right now. Go back, put the effort in yourself. You'll be rewarded because you'll actually know it rather than me telling you here right now. But if you did watch the newsletter and you saw this lower high here early in the session today, you pretty much knew, right? We only had 1 scenario to look for today, and that was, well, 1 of 2, where either the flag, right, or that spike in range. So we got the spike in range, right, which gave the bulls excellent opportunities here today, right, to buy the lows of that range. But now we're trading back up at the highs, right? Now we're up at the highs of that range. And remember, we don't want to buy the high of the range, do we, right? Most breakouts fail, right? So rather than looking to buy the high right now, we want to look for that kind of creative fake out, breakout pullback that we've talked about quite a bit this week and this month overall, right here in this newsletter. So again, like I said earlier, pretty easy to see here. It's a strong spike up to finish off yesterday. Last night we talked about those 4 scenarios, right? Lower high. You pretty much know, right, exactly what you're looking for here right now. With that said, that of course leads into, right, the spike in range. When you have a spike in range, we now know our job is to buy the low, buy the low, buy the low, buy the low of that trading range. Buyers had a field day today buying low of that trading range. Now, what do we do at the top of the range? I'll tell you what we don't do is, right, we don't buy that breakout, right? This obviously reacting to this afternoon's FOMC announcement. So there was probably a little more juice in the tank, right, for these bulls right now. But this is that classic scenario we want to avoid. Most of the time, when we break out of a range like this, we pull back. Usually this breakout will fail and go back into that range. Our fake out breakout pullback says look for a trap below that low, right? And that's going to be the buying opportunity, right? So this is the old fake out breakout pullback I keep talking about on our nightly newsletter. Now, look where we are right now. As you can see, we held the pullback, right? And we're trying to go up and make some new highs right now. That automatically now tells me I would love to see this price pull back to that 48.68, right? Lining up at the low of this rising support trend line, right, at the low of that channel, right? This would be a great spot down here now to be looking for a trap low, and then up we go, right, to finish off that move. That's the ideal situation right now for the pullback. Really, there are 2 areas we're looking right now. Pull back below that 68 for the trap low. That will be the easy one. The more difficult one would be if we, of course, now go back to the low of that range. If we do at that point, it'll be a short-term bear market. We'd have to look for those sellers to fail, and we can buy from there. So ultimately, 2 spots to be watching here for tomorrow, below that 68, and of course, below the low of that range. It'll be a lot easier to trap low back up. If we do end up collapsing back down to the low of that range, we'll then have to look for those sellers to try twice, right, and look for that failure from there. Now, what if we don't pull back? You know, we just heard from Yellen, right, where they're raising interest rates. This could easily keep pushing higher here right now. What if they don't pull back? I'm glad you asked. Well, first of all, we have a measured move, 1, 2, 3. That measured move, you'll also notice, lines up with the double up, right? The double up off today's inventory report. Now, I talk about this in our intermediate classes. Anytime we see a big news breakout, right? Anytime we see a bunch of these tonight, anytime we see a big news breakout, okay, today it happened at 10:30 a.m. Eastern time on crude oil, right? For the other markets, it was 2 p.m. Eastern time for the FOMC, right? We have these big news events, inventories, FOMC, non-farm payrolls, right? There are certain big, hefty news events that really demand our attention every month. We got one this afternoon. Now, take that news event, right, and grab the size of it, right? Measure the size of the range, right? Measure that news event, and then just project it into the future, right? It's called a double up. Measure it, bingo, right? It's a very simple technique, right? And we teach all the details of how we do it because we do want to use specific chart time frames, right? If you're an intermediate member of mine, you know exactly what I'm talking about. If you don't, make sure you come out and make sure you join the trade room tomorrow morning as an advanced member, and we'll walk you right through it all, right? So that double up right now is giving us targets, right, overhead. 5 of these markets have those targets on them tonight, right? Crude oil has one of them up at that inventory double up at 49.34, right? So this is where they're hunting for right now. That's where they're hunting for right now. Again, we talked about we want that little trap low, right? We want the dip, but if we don't get the dip, what do we do next? Well, how would you classify this move higher? If I asked you right now, how would you describe this move? I would describe it as a spike higher, a strong move higher. Now, remind me again, what do we look for when the market makes a strong move up? See, we talked about this in last night, right? Spike in range, trap, right? Spike in channel, right? You get the point, right? We talked about this in last night's newsletter. See how this all keeps building on itself? So, you know the plan now. You can probably finish this sentence for me. Price goes up, right? We run, bam, right to the high. Right? We open up, we just run right up. Who could blame them? Right? That juicy target waiting there overhead. Not to worry. Spike in range. Right? Trap low, buy it back up. Maybe it turns into a spike in channel. Right? Pull back, buy it back up. Right? Maybe it turns into a flag. Buy the low of that channel, buy the low, buy the low, buy the low. There are, again, right, 4 different variations of that. We talked about it in very good detail last night in the newsletter, right? There's 4 of them we're watching for tomorrow. So if the price goes slamming higher here, do not buy into it, right? Because that's the major objective. Look for that little whoop, trap low, right? And make sure you buy the dip, right? Don't just buy the dip. Look to buy the dip, but make sure, I like to take the second one, right? Not the dip, but the trap, because the trap, that's where all the experienced traders are going to be waiting here. Maybe, right, maybe it lines up with, right, this old measured move, right? Maybe we go up, pull back, trap, right, and we get that buy right there. We won't know that, of course, until we see more tomorrow. A very interesting chart on crude oil tonight. One of the more challenging charts. You can see that range, and of course, right, that breakout, right, and of course, again, we'd like to see that trap low. If not, right, we'll look to buy it as a breakout, as a spike into a spike in range, most likely here tomorrow. About some S&P, the E-mini is bullish and trying to retest a triple up target it reached earlier in today's session. The bulls have control, and trading at the low of that spike in channel is a beautiful place to look for buying opportunities, but this no trade zone between the double up, the measured move, and the triple up are telling us to be careful getting too aggressive tomorrow. The plan for tomorrow is quite simple. Look for a trap low if price goes higher, and look for seller failure if we get the pullback into the battle zone tomorrow. No matter what happens, the target is simple. Back to retest the high. We just need to find the entry point at this point. Now, with that said, the bulls are pretty much in charge all morning here today, pretty much the entire session, right? They had a channel, and of course, as we talk about in our intermediate class, right, according to the price action cycle, we know that channels will usually have 2 legs, right? So, of course, we have our measured move, right? That measured move was reached. Again, if you're an intermediate member here at School of Trade, you know exactly what I'm talking about there. At the same time here, we saw that FOMC announcement come out. What time was it? 2 p.m. Eastern time. The size of that FOMC break higher allows us now to find a double up and, of course, a triple up, right? You can see it runs all the way up to that triple up, right? Take the size of the FOMC announcement, right? Take the size of the reaction, not the announcement, right? Double it up and then tripled up, right? So you can see they got the prize at the bottom of the cereal box, right? They got exactly what they were looking for. Price runs up. Now what happens, guys?